Hello and welcome to another update video about Gala. Gala chart reacted initially to the support region and dipped obviously yesterday with that massive sell-off that we've had into the support area there, into our orange support region that was communicated. The price already reversed out of it, and from the low point, the market actually already recovered like 25%, 20 to 25%, but has not broken above initial resistance. So what we're dealing with here on this chart is obviously this corrective rally that we discussed in an ABC structure. Yep, in a bearish interpretation, the top could absolutely be in. This chart has fulfilled all the requirements that an ABC rally is in. And when we look at a larger degree, we can see 5 waves down from the all-time high, bearish, and then a 3-wave rally. And I mean, if the market now rolls over, this could be the 3rd wave down, taking the price to all-time lows. Is that expected? Not yet, at least. I would like to see, because we are still in a bullish market, trend continuation to the upside, really. And if we go to the 4-hour chart, that means that this initial ABC structure could rather be the larger A wave in yellow. Then we could see here this larger B wave, and then a larger C wave to the upside could still follow. And that is sort of my main thesis, this larger C wave to the upside, like an ABC structure. And the C wave to the upside obviously then could come next. Now, when do we know the wave C has started to the upside? First of all, what is the target for the C wave? Can't really give you a proper target yet because we haven't got a confirmed low in place for this B wave pullback. But just roughly, if we assume the low is already in, then it could take us to 23 cents, the 1-to-1 ratio next. The next main fib level I think is relevant is 16.6 cents as resistance. So maybe that's it. Maybe that's it, what it's going to do. You know, maybe it's not going to stretch higher, but that's going to be the next main resistance I'd say we have to observe. And then the 23 cent level. But we need to see a first break of micro resistance for an early indication that a low is in place. That means we need to see a break above 4.78 cents. That's the initial resistance level. That's the 50% fib level of the third to the downside. And a break above the same, would be an indication that a low obviously is in. And then we can look at 5 waves up in wave 1 and a 3-wave pullback in wave 2. And that would be the next trade setup. If anybody doesn't want to buy here, which I can understand, you know, it's in these sharp sell-offs, people often don't want to buy. So many people wait for the first 1-2 setup. Here, disclaimer, sometimes these are not clear. So sometimes the C wave just escalates rapidly. But at the moment, we're still holding below resistance. Now, it will be interesting to see how the weekly candle closes. Seems like the market is stabilizing a bit, but more like consolidation after an initial rebound. So one more low is definitely possible. Could probably lead to a bit of the building of a divergence, maybe here on the daily time frame or so. Or let's see how the 4-hour chart looks. Do we have a bullish divergence here already? No, nearly. But if we get one more low, I mean, on the price chart, that might lead to a bullish divergence maybe on the 4-hour chart. We'll see. Just nothing that has to happen. Okay, we don't need divergences for the price to form a low. But here on the 1-hour chart, we actually have a bullish divergence. So yeah, essentially that means one more low could happen. The wave count suggests that this seems likely at least. Sometimes when we have these rapid sell-offs, the last low doesn't happen. So you can always bottom in a WXY structure. That's just a less common pattern, but something I'm always very mindful of, especially if we have strong sell-offs like we've seen and experienced. So just be aware that a break above 4.78 cents is first indication a low is in. That would need to be followed with or by a break above the yellow wave 2 high, which is here at 6.9 cents. Yeah, this if that level is broken to the upside, then we can look for we basically have a confirmation, right, that this probably wave 1 of C is unfolding. Until then, we haven't got any confirmation. And just an early indication will be offered with a break of 4.78 cents. And if we get one more low, then we might test the 2.6 cent level, which is the golden ratio level, 61.8 retracement. And below that, the only other support level that's left is at 1.9 cents. Ideally, we don't even get there. Market is pretty much oversold. If we see one more low, I think it would be enough to get to the golden ratio level there. It's already quite a decline. And then maybe a quick rebound from there. Any sustained break below 1.9 cents will seriously challenge the overall short-term, at least, bullish thesis. That's my update about Gala. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.